Good day. Ira Epstein with your SPDR ETF wrap-up, and this is for Thursday, the 30th of April, 2020 at 4 p.m. Central Time. Well, look behind me. Pretty big sea of red. USO up, and they finally straightened out the charts. They've adjusted all the charting for the reverse split the stock had. FXE was up. We saw today that the European Central Bank meeting with Ms. Lagarde, market took it as positive, up 80 points. British pound soaring today. It's been in an uptrend, but it took off. Everything else down. So what's going on? Well, it is the end of the month. We had a phenomenal recovery month in April in many of the stock indices. You can't fight that. A lot of the individual SPDRs and ETFs came back up too. So could just be month end. It could be that the market has had it with this rally and it's starting to, if you will. It's gone up, and now reality of economic data flows, especially in April, are going to be really ugly. They can't be good. I mean, the world was shut down. You think you're going to get something good? So it's a degree of how bad they're going to be, and that's what we'll be looking at. As we take a look at the technology sector, we saw today more reports coming out. Apple just reported, and I saw it was down on the report, but they increased their dividend 6%. Not bad. Their revenue beat estimates. They lost cash, though. So maybe the market's looking at that. I don't know. But the fact that this market is able to stay up and over a 62% retracement puts it in high doubt that we're going back to revisit these lows. That's my opinion on the market. When we come over to the technology sector and we just look at the swing line, we're going to build a chart now. This is what I do in my charting course, but it helps you understand what's going on. The pattern is one of higher lows, higher highs. All that the swing line does is it connects the current day according to one of 5 preset rules. Should the line from the previous day be drawn to that day's low or high? That's it. So the rules are there in the course. I built the indicator. It does it all automatically for you, but it's great to know how it works. You'd have to take out 86.59 on the current chart pattern to break the trend just on the swing line. Next, I look at moving averages because they filter things. And the average, number one, you had a crossover. We're back here, and we can see this. The red, the 18-day average of closes got over the 200-day, and then the market went for a new high. So it's already done what it had to. How high it goes, you can't get that out of this, but you know that you got positive momentum there. There's another thing. The 87.30 now is above 86.59. So if the market gets through the 100-day, that is still a valid point as long as we don't get a market that has lost momentum dramatically. When we look at where we rallied to, you're there. Today's high 92.01, and you're up right against that Bollinger Band. I would be surprised if you just pop through it and run. So I'm not surprised that the market's run into a wall of resistance against that number. When I look at momentum, it's still embedded. So I still think that until this red number closes under 80, that the tech and the pros are going to be buying this market on the pullbacks until that red line closes back under 80. Then I think they bail. When we come to SMH, here I'm watching what's going on, and look at this number. Let's go back the day before. Both numbers over 80. Both over 80? Just got away from it. Here both over 80. Here both over 80. Not there. Never embedded. That's my point. So we have a market that's just overbought. Can't get through the upper Bollinger Band, which it did hit yesterday. Thrown back to the 100-day average. Could come down here, but it's not a buy. And the reason I say it's not a buy as a technician is what do you do with the overbought condition? It either embeds, and I'd rather wait for that if it occurs, or it corrects to the downside. And the only way it corrects to the downside is if prices drop or really just keep going sideways. Okay, I'd rather not be involved. When I look at the industrial sector, you got up yesterday. Right here, these 2 days for your first test. I know I came out and I said, that's where I think the pros got out. period. And I know what I said in this morning's update for my morning subscribers. They know I was very adamant about what today was going to be, and you're getting that correction. You're never embedded. You're just overbought. So an upside target has been hit. The market is overbought. I don't think the pros support an overbought market. And the energy sector, overbought into the upper Bollinger Band. The odds of closing and staying over that band 5% of the time. A nice rally, but is it time for that rally to give up some ground? I'm not bearish. I just don't see reasons to be bullish. There's a difference. In QQQ, I'm still very much in the bull camp. The market's got a fully embedded reading. The market still has a pattern of higher lows and higher highs. And you might even get another bullish crossover where the 18-day average gets over the 100-day in the green. So I see support right in that area. If the market drops there, I would expect the pros to be a buyer, but I also expect they'll bail if the first time that red line closes under 80. In the emerging markets, I think yesterday was the bail day. First challenge of the upper Bollinger Band. Market rejects today and down 1.2%. That is a big resistance area. I mean, if it runs through it, as you know, I'll be talking to you get there. I see pros not wanting to be in this. The market's overbought. It's hit a target as of yesterday. That's what I think. In GLD, now I've got these arrows pointing up. I got to throw them away. I forgot to do these before we did the show. Lower highs, lower lows. So until you get back over 161.85, you're bearish. Entered the bear camp. So I think the pros will sell this market at 160.08 with stops over 161.85, looking for 155.27. In the gold, miners, the market lost its embedded reading. All week long I've told you, the first time it loses, I think that's when the traders are going to bail. I think they're bailing. And I wouldn't be surprised now if price wants to get back to that 18-day average of closes to regroup. What is the chart pattern now? I've got to take this away, this arrow. I'll be putting it up here. Frankly, I thought I did them and I didn't apparently. Lower highs, lower lows. Now, it's not a confirmed downtrend like gold. Why? Because the bias is up. The filter on the swing line when you're over the 18-day average says no, no, no. So when the two don't agree, you back away from it. This all taught in my charting course. And by the way, I'm not putting out buy-sell recommendations here. I do that in my SPDR ETF at the end of the day, and it's quite specific, as you'll see. TLT, as I told you, I thought we had a failure in this whole area because it didn't get through there. This market today confirmed a bear trend. You have lower highs, lower lows. I'd look for resistance at the 18-day average. This gets, to me, nullified if you get over 170.26, but barring that, 163.45 downside target, momentum pointing down. FXE, the market today, outside day up. So you take these two arrows, throw them away, and now you start drawing up arrows from there. It's sometimes fun when I don't take them off and I can explain them. And that's because the swing line turned up. The bias is up. The momentum has been up. Momentum's been leading price on this. Now the target, first target, upper Bollinger Band. If you get through those with any meaning, then you've got the two moving averages, the 100 and the 200 day above the market. So that's what I do. I try to come at this and teach here and really explain and throw out the trades at my SPDR ETF. Now, we've had a lot of people writing us, what time do they want me to do the SPDR ETF? It appears that most people want the end of the day. They like it right here. And the reason for that is a lot of them subscribe to my morning subscriber video on futures, and it covers what gold's doing, silver's doing, the bonds, the notes, and all the stock indices and currencies. So between the two, if they're subscribers to both, they're getting what to expect on one that helps the end of the day. I hope that makes sense, but I can see what they're saying. So I'm going to stay doing my end of the days. I've made up my mind today, right what it's been, afternoon video. This is what's covered. Now, we've added UNG to this. So we're now covering also the natural gas, and I'll probably soon add in the metals, maybe the silver miners to it. I don't mind adding more and more for the traders on it, but I do appreciate the help that y'all gave, but the survey was pretty one-sided at the end of it, that more traders than not wanted the afternoon to stay just as it is and the timing. Where you get this video, because you're not going to get it on YouTube, you're not going to get it anywhere but with us, is if you'll go to our website, under the word research, that's where you can get this. You'll see it's all explained there. I even made a video all about it. There's a lot of things that are now going on now that I know what time I'm going to stay with. So I hope you subscribe to it. I'll see you tomorrow with our weekend edition and talk to you then.